Shifash, thank you so much for being with me today. We have known each other for some times now, having met multiple times, chatted from time to time. But I totally forget to ask you one key question about why or how did you come to know about actuarial science?
Thanks very much, Ashwag. Afternoon to you, and thank you for inviting me to be on your podcast. I understand this may be one of the earlier episodes, so very grateful to be invited. And also congratulations to you on this initiative. Like many people who were introduced to actuarial science, in the beginning, I didn't know what it was. This myself, I was introduced to it in high school. Just before leaving high school, there were presentations done by several potential employers who were actually offering scholarships for actuarial science. Very new to myself at that point. I had never met a fellow actuary. I hadn't been introduced to actuarial science before that kind of presentation. But I was definitely encouraged to go to take it forward because of my aptitude for mathematics. So like many people who start out in this profession, it's a love for mathematics that takes you forward.
Okay, interesting. And did you do your undergraduate in South Africa or in somewhere else?
Yeah, I did it in South Africa. My undergraduate was done at the University of Cape Town. So 4-year undergraduate degree, writing exams while studying. So that really helped to move me forward fairly quickly.
Go ahead, sorry.
Yeah, so writing the exams and then being closer to qualification than I otherwise would have been after I graduated, it meant that the exams that I wrote while working, there weren't too many in number.
Okay, and how many universities that offer actuarial program in South Africa? Do you know?
Surprisingly, quite a few. I'd say at least more than 5. And that was when I was studying it, and I graduated in 2005. I imagine the number has changed. It may have increased since then, but there's quite a few universities that candidates can select to study at. They will differ in terms of the number of exemptions that they grant to students. There are definitely many options to choose from.
Okay. And here in the Kingdom, we have 2 universities that offer actuarial programs. We have King Fahd University, which has started to offer the program since 2008. And we have King Saud University, which has started to offer the program since 2010 or 11. The number or total number of graduates from King Saud University is around 415. 63% are female and the remaining are male. From King Fahd University, the number of graduates is around 50, and mainly all of whom are male, since the program is only offered to male students. If I start this conversation, you have been supervising and working closely with the students graduating from King Saud and King Fahd universities, as well as collaborating with the universities themselves. How do you evaluate the actuarial program at both universities in terms of the quality of the graduate, the connection with the industry, and the effectiveness in guiding students to complete more actuarial exams? Go ahead.
Yeah, I think that's an important question, Ashwag. If those 2 programs if the initiative wasn't taken to start those 2 programs, and again, an essential ingredient in all of that was the support by the regulator, SAMA, or now the Insurance Authority, then the landscape of the profession today in Saudi Arabia would be completely different. I think, as per the most recent report on the actuarial industry in the profession, this was a report, an annual document that the regulator circulates. There are roughly or just under 200 members within the actuarial profession in the kingdom as of 2022, at least. And close to 75% of them are Saudi nationals. Without the kinds of programs that the universities developed, I believe King Fahd University is over 10 years now that the program has been in place, and King Saud University may be closer to 7 to 8 years. Without these kinds of programs that are producing large volumes of graduates, the industry would not be in a position that it is right now, which is much stronger in terms of technical competence.
Okay.
That being said, I can also give some feedback that, like you mentioned, we've been taking interns from universities since as far back as the first intern batch of King Fahd University, which is a long time ago. And over that period, I believe we've taken interns every single year, even up until right now. So interns will obviously move on towards full-time employment. And it's really, really important that when we look towards where to bring students from, we look primarily towards the local training institutions. And at the top of that list are KFU and KSU. And I'm not speaking from the Saudi perspective. I'm talking about from a regional perspective. These two universities obviously stand above the others. So they really have supported a company like ourselves, who continue to take students and who continue to take students on full-time employment, not just interns. And I speak from a consultancy or from an actuarial services provider point of view. This is exactly the same when it comes to the medium to larger size insurance companies, who typically employ more than just one person, which is essential in terms of building a team. What closer to your question, what actually speaks to the quality of the students that are being produced? And the key one that I would put there is in terms of the quality of the faculty and the teaching syllabus that's created. We have seen typically where members of the faculty have some sort of actuarial background or actuarial connection. There's a lot more relevance when it comes to the teaching, the subject matter, and obviously the students' willingness to join that kind of department. And I know that there have been changes within the universities themselves on this front. So I've always found that when you have people at a faculty level, and ideally people who are qualified, even if just as an associate, it's completely fine, because it means that it makes the education a lot more relevant. So this is where I found that there's a lot more strength, and obviously there's room towards improving these kinds of things, because it's not easy to find that in the region.
That's right. Yeah, I totally agree.
Exactly. So when it comes to the guidance in terms of exams, this is where it's also important to have people or members of the faculty, and even if it's just volunteer members of the faculty that are outside of the university themselves, where you have guest lecturers or those kinds of initiatives, where those are in place, you improve the advice and the quality of the advice that students are given in terms of writing exams, how to study, how to plan studies and exams, how to plan university exams as well as actuarial exams side by side in order to increase the success. So there we've seen that there's a lot more room for improvement. The better graduates that we see as an employer graduate with 2 to 3 exams, maybe some with 4, but that is rare. I think there's improve that. Yeah, please.
Yeah, and have you ever communicated with them, or you shared your feedback with the universities? Do you see okay, you can access to those staff who work at the university in both schools, of course?
We've generally found them very receptive.
Okay.
We've had several instances where former students of these universities who either joined us in an internship capacity or an internship capacity and then went on to become full-time employees of LUTs. Whenever we volunteered to have them go back to present at the university in terms of relevant subject matter, we've always found these two universities very receptive to these kinds of ideas. When it comes to potential changes in syllabus or guest speaking, which we haven't been involved in a formal capacity, rather than just a volunteer capacity, that is where I think that there's definitely more room for improvement in presenting on topics which are current from an industry or from an actuarial services provider point of view. So I think that they have generally been receptive, but I think that there's definitely room to improve that. So we as well as others in the industry can contribute more towards making the students more employable.
Okay. What about the exams, Shifash? Because what I have seen, we don't have many students who write actuarial exams while they are in school. What do you think the reasons behind that?
I think there's potentially an awareness issue of which exams to write. There's also a guidance issue, how to study, how to become successful, and ensuring that when you write the exams that you actually pass. Now, I think that is improving. because as more students get produced, and as now, like yourself, fellow actuary, together with one or two others in the industry, many associates that are getting produced, there's an improvement in that awareness. So I think that you will see more of these students start to take these exams, and potentially more success for these students that are writing it at that early level. But right now, I think that there is room to improve the guidance they're getting, not just from the faculty of the university, but also from those in the industry, to go in and say, if you're going to write a 4-year degree, or if you're going to take a 4-year degree, you should really aim to get at least 3 to 4 exams passed. So in order to do that, you have to start very early, because it's a question of balance.
That's right.
And that level of guidance is not automatic. There has to be an involvement from the industry to say, look, you need to know this, as well as former students, as well as the regulator. And I believe everyone is contributing to a certain extent.
That's right.
But yes, there's a lot of room to improve this.
Okay. Now, as we know, worldwide, once the students graduate from school, they typically join insurance industry. Okay. And the insurance industry in the kingdom has a long history. The regulatory entities such as CHI and SAMA have been monitoring insurance companies since 2003. Why did key companies begin to establish actuarial functions only in 2012, or maybe after 2012? And even though it is now 2024, many insurance companies still don't have an effective actuarial function. In some, for example, in some insurance or large insurance companies, the actuarial function is limited to the valuation responsibilities only. Go ahead, Raj.
Yeah, so Ashwag, I take your point on that. I think there's definitely been improvement, especially in the recent past. I believe you are already aware, and you may have made reference to this already, that the actuarial work rules, which were introduced by the Insurance Authority, or at that time SAMA, really did catalyze the employment of actuarial students and qualified actuaries within insurance companies, because it became a regulatory requirement. So yes, there has been more emphasis being placed in the recent past, since 2020 specifically. But you're 100% right. We look as far back as 2012. It was only really the companies that had scale that were investing in this kind of resource in any serious way. Those who actually understood the amount of value that actuaries could add in the industry weren't necessarily in a position to be able to absorb them, because you would have to make a case to employ a qualified actuary, to employ an actuarial student, who traditionally are higher than average salaries, who earn higher than average salaries. So the companies that didn't have scale, one, if they did have the willingness, they probably did not have the budget. But to be honest, I believe that not many of them had the willingness in the early days. Now, if you fast forward since then, 2012 to 2024, the situation has changed significantly. I believe almost all companies will have some form of actuarial representation internally. One, because it's a mandate under the actuarial work rules. But two, because the companies that have certain element of scale employ much more than their required minimum of 3 students. You find that the larger companies have sometimes closer to 10, 11 actuarial students, qualified actuaries across the company. So those are the ones who basically lead at an industry level. They lead from a scale perspective. And I believe they'll always be ahead of the curve, because they're willing to invest in this kind of resource without necessarily having to do it to comply with the regulations. So this is where you really did see that growth. Now, a second element that adds on top of this is that the changes in the regulations, I believe, I would say since 2019 till today, particularly on the financial reporting side, there was a necessary involvement of the actuarial function outside of just the actuarial work rules. So the technical competence of the actuaries was actually seen. People could see that the actuarial function is necessarily going to have to be involved in financial reporting much more than they historically were. So there was obviously a greater injection of actuaries into the industry across all fronts. So these companies that historically didn't now are starting to identify that, look, this is something that you need to invest in. So whilst it hasn't been as quick historically, I believe it is picking up speed significantly, particularly in the recent history. And I mentioned to you the number of actuaries that worked in 2022 was at 100, just under 200. I imagine that number is increased now. and a lot of actuaries and actuarial students, Saudi and non-Saudi obviously, are based in the kingdom. And if you were to say, if you were to tell me 10, 12 years ago, would I have expected that? I would have been very skeptical. But I mean, it's a welcome surprise to see that, yes, even I was proven wrong, that yes, the initiatives that the regulator and the universities have taken and the changes in regulation have led to this mushroom in actuarial growth, particularly Saudi actuarial talent.
Perfect. You mentioned about the actuarial work rules that was published by SAMA in 2020, stating that by 2026, each insurance company must have a Saudi fellow actuary. Currently, we have 3 fellows and maybe 10 or 11 associates. My question to you, what actions have been taken by the insurance authority to ensure this deadline will be met successfully? And do you believe we will have enough experienced individuals to fill the C-level roles? Go ahead.
Yeah. If I answer the second question first, I believe that we're in a strong position for that to occur. By when, however, I think is more important. When will there be enough experienced individuals, actuarial individuals, Saudi actuarial individuals to fill the positions of CFO, CEO, CRO, CTO, Chief Underwriting Officer, and so on and so forth? Because these roles are really suited to people with the kind of technical background that actuaries bring. So when do I think this will actually happen? I think you might even see this in the next 5 years, 5 to 6 years. There are those at a mid to senior level who can be in a position to occupy that role, outside of just the traditional head of actuarial function or appointed actuary, which are traditionally the roles that are led, obviously, by people who are qualified because it's necessary. So I think that you will see this in the next 5 years.
So,
go ahead.
Yeah,
so coming back to your first question, what actions has the regulator taken? So Ashraf, you will be aware, we mentioned actuarial work rules, particularly the Appendix 1 of the actuarial work rules, which accelerated the placement of students. Now, over and above that, the regulator publishes a report on the assessment of the actuarial function, which covers many areas. And this report is an industry report. It covers all of the regulatory submissions of the appointed actuary who he or she is expected to work closely with the internal function. And it goes through what the regulators observed at an industry level. And it also talks about where there have been areas that require improvement, areas in terms of trends that are commented on. So the regulator does provide quite a lot of feedback to us in that capacity, in terms of that report. I believe the 2022 report was the first one, and there will be one for 2023, to give us the feedback in terms of, look, how many actuaries are actually being employed? What are the companies in the industry doing to foster the growth of actuarial talent? I mean, you mentioned having a qualified actuary by 2027, a fellow qualified Saudi actuary. This does not happen automatically. You need support in terms of exams, support in terms of leave, support in terms of incentivized salary structures. A lot of these items which are itemized in some of the templates that the regulator circulates. Now, over and above that, there is an Excel template that companies themselves populate and submit to the regulator on an annual basis that requires information to be given on the development of the internal actuarial function itself. So what are companies individually doing? So does the actuarial function or the head of the actuarial function report to the CEO or not? What is being done in terms of resourcing and qualification? What is being done in terms of resourcing of the department? And what are the relevant qualifications and experience and the future exam pathways of the relevant members of the team? What's being done in terms of training and development, specifically that which is supported by the employers? So you know that it's very difficult to pass an exam on your own. If you are supported, it's much easier. So what is the industry actually doing? And obviously in the annual report that's produced, you get to see how your company is different to the others by just looking at what the percentage splits are in terms of who is doing what. Over and above that, what are the expansion plans? If for whatever reason a company does not meet the minimum requirements of having 3 students today, what are they actually doing? What is the plan to hire an internal qualified actuary, and also groom a Saudi qualified actuary. Then there's knowledge transfer activities from the appointed actuary to the internal actuarial function. So myself, as an appointed actuary, what am I doing? What is my team doing to facilitate knowledge transfer so that these requirements can actually be met? These deadlines can actually be facilitated. And then what is the involvement of the internal actuarial function in statutory deliverables? So there are multiple initiatives that I've seen taken to move the ball forward on this area. But the regulator can only do so much. Those in the industry, like myself, external audit companies, other consultancies, insurance companies, those part of the wider industry, the responsibility really is upon us ourselves to say, what are we actually doing to support the initiative? If all we're trying to do is meet the regulatory minimum, I don't believe it's going to have as much success as it can have if we're all actually going to work together on this. So this is like you mentioned earlier, one of the reasons we choose to invest in this. And we've seen the rewards of it. Where you support local talent at a grassroots level, the benefits are definitely there. And I believe that the larger companies and the stronger companies, you don't have to convince them of that. They've definitely bought into this.
Regarding to supporting the actuarial or young actuaries, do you think actuaries who work for insurance companies or for consulting firms as well receive that type of support? For example, like knowledge transfer and so on?
I believe there's room to improve it, Ashok. I think that the larger companies, the companies with scale, you can see that is present. There is some formal structure in place which has the endorsement and the support of the management and the audit committee and the board. Maybe not all members of all of these levels, but you do have that level of support to say, look, we do need to invest in it. But I've definitely identified that there are some companies who definitely need to work harder, where there is potentially an absence of someone at a senior level, an internal actuarial function level, because of potential churn in the business, turnover of staff. And so that structure is not in place to facilitate that development. The best way to grow in terms of becoming an actuary is to have someone at a senior actuarial level giving you that guidance. And I don't believe that it's happening as effectively as it should, particularly for the middle to smaller companies. Do I see improvement? Yes. We've seen several initiatives that are taken from some companies who are not really very large in size, but there's definitely room for this to be improved. There have been some companies who have struggled to meet even the minimum requirements of the regulator. So yes, there's room for improvement on this.
Okay, this is yes or no question. Okay, by 2026, are we going to see Saudi fellow actuary under each insurance company or not?
I believe as it stands today, I would be surprised if all companies are able to meet it. Okay. We obviously will try to do our best to support it from an external point of view in terms of developing students who can potentially move onto qualification. But I'd be surprised. Now, if we're looking at a market of roughly 22, 23 companies by that point, maybe even less. And today we're standing at 3 qualified fellows. Maybe that'll change by the end of this year. It's difficult to see how this can get close to 20. And that being said, these insurance companies have to be able to offer packages to qualified fellows that are commensurate with their level of qualification and experience. So I see that it will be a challenge, particularly for the smaller companies, to be able to meet that requirement. That being said, I've been proven wrong historically. 10 years ago, if you told me we would be where we are right now, I would have been incorrect. It's just that 2026 is very soon, or end of 2026. I believe it has to be done by March 2027. So I believe that was 7 years after the publication of the work rules. So even with an additional 3 months, is it possible? I believe it's possible, but I believe it'll be a struggle for your smaller companies. I believe your larger companies, they already meet this requirement, or some of them already meet this requirement. I believe that the middle to smaller companies are not.
Okay, Bupa, 1 second. Tawriya, I think they have associate, Saudi associate actuary.
Yes.
Bupa, they still don't have associate actuaries. if I remember well. Am I right?
Yeah, well, the number of associates in the kingdom is changing regularly, so it's difficult for me to know exactly what the position
Yeah, like,
we look at
okay,
these days.
okay.
But I believe if they don't, that they might have one very soon.
Okay, perfect. You mentioned the appointed actuary or the external appointed actuary, and this is my favorite area of discussion. Currently, we have almost 4 active appointed actuary firms. We have Nifaq, we have Flux, we have Pedri, we have SHMA. Okay. Despite this, many insurance companies continue to express the or dissatisfaction with the quality of the appointed actuary work. In addition, insurance companies overlook the recommendations provided by insurance by the appointed actuary. And some insurance companies, what they do, they provide the results or they share the results with the appointed actuaries, and the appointed actuaries incorporating these results into their reports. What do you think, or why do you think we have this gap between the appointed actuary and insurance companies?
So I hear what you're saying here, Ashwak, but I'll also make reference to something which is also the initiative that the regulator has taken in terms of a survey that all companies are required to fulfill on an annual basis that grades the performance of the appointed actuary across regulatory and non-regulatory deliverables.
Okay.
So this does take into account things like what is the extent of the external auditor's actions on the appointed actuary, what's the number of resubmissions of appointed actuary reports, and several other areas that speak to quality, attention to detail, professionalism on regulatory as well as non-regulatory aspects. The actuaries are given a score of 1 to 5, 1 being heavily unsatisfactory and 5 being exactly the opposite. And this is shared by each company who populates it on their own and submits it to the regulator. Now, those results are not shared publicly, but they were shared in private with the appointed actuaries themselves in terms of graphs that the regulator did share for us to visually appreciate. And to say that there were significant issues, I don't believe that is the case. Are there areas where appointed actuaries need to work harder, particularly on timeliness of turnaround? That is definitely an area which I remember does need more attention. But I'd say overall, our grading wasn't heavily unsatisfactory. I believe it was in the region of satisfactory, from what I do remember. Now that being said, I do always believe that there's definitely room for improvement, particularly on the buy-in of results that are produced. I guess when it comes to the point I believe you're referring to, and I believe that it's more closely connected to reserving as opposed to pricing, where appointed actuaries may be in a position where they're forced to produce numbers, or they feel coerced or unduly influenced to produce numbers that that they may not be comfortable with, but which the companies themselves are pushing heavily for. Have I been in such a situation? Yes, I believe all appointed actuaries will find themselves at some point in the situation where you believe the company is trying to push for a result that is not correct, or basically you're not comfortable with. So it's not something that is highly unusual. It can happen, and it's definitely not proper. So the extent to which appointed actuaries allow themselves to become unduly influenced, I would hope that it is rare, if occurring at all. I believe it may have been the case before the actuarial work rules were in place, so that you could not. Now with the actuarial work rules, you are able to make reference to certain documented forms of regulation that you can draw on for strength. And I would hope that actuaries also, regardless of the actuarial work rules, abide by their professional standards. And they use their channels that are afforded to them in a professional capacity to address the issues. So within a report that an actuary may not be comfortable with, there can be adequate levels of disclosure of areas of uncertainty where judgment has been relied upon, recommendation for other control functions to improve their level of involvement, internal audit, external audit, sorry. But in those extreme cases, which I believe you may be referencing, where it's clearly incorrect and the actuary is not comfortable, then the onus is on the actuary to take their stance and to do the best to ensure that it's adequately communicated to audit committees, to boards, and obviously to the regulator. So it's really important that in those instances where the actuary feels as if they're being prevented from doing their job in its fullest, or they fulfilling their obligations in the fullest. There's clear communication with management, and it has to be very, very well documented and very, very clear. Now, this is important, Ashwag, when it comes to things like changes in regulation. With IFRS 17, a lot of members, as an example at least, a lot of members of management, audit committees and boards may not be in a position to understand a lot of the intricacies that the actuary, or the appointed actuary in particular, is recommending, which means that in some instances, there might be pushback in some of the decisions being made. Now, in that instance, it's the obligation of the appointed actuary to ensure that adequate time is spent with the board and audit committees and management on education, on what is the impact of the decisions that are being made, and why is this recommendation coming from the appointed actuary? Because you cannot expect everyone to know what the appointed actuary does. So we have to take the front step in saying, look, this is why we're recommending what we're recommending. This is what it's based on. We're always happy to hear another point of view if it's supported by facts, if it's supported by certain